Let's go over the 24 biggest deductions you can have for your business in 2023. It's the difference between having a small amount of taxes and a huge amount of taxes. So let's start going in that right now. The first that we're going to cover is all the basics that you probably know most of anyway. Electronics, any hardware, any software, your cell phone, including the cell phone service, your camera, any electronics, computers, all of that stuff. Any electronics that you use in your business are deductions. How about your vehicle? Now, your vehicle has two different ways. You have actual expenses or your mileage, okay? And you can choose between which one that you want to use. But bear in mind, if you go with mileage, you can switch to actual, but you can only do that one time. You can't switch back. Now, when it comes to meals, you can still deduct those at $75 and under without a receipt, but you need to keep a ledger of what you were doing and why you were going and what business purpose you had, and if it was a previous appointment beforehand. Otherwise, you can't use it. You need to keep a journal of why. But of course, it's best to keep receipts. The next is office expenses or a home office expense. And this includes utilities, mortgages, internet, insurance, repairs, maid or janitorial, furniture, coffee machines, real estate taxes, home depreciation. All of those things can be deducted and help you save money on taxes. So if you see anything in this list that you're not using, pause it and make sure you're using these deductions as best as possible. Now let's go through the home office deduction. This is huge. This can be worth tens of thousands of dollars over every single decade if used properly. Number one, if using a large part of your home used as an office, you can use the percent of the house that's used, which in many cases is always a bigger saving than if you're using a smaller part of the house, which is a $5 a square foot savings that maxes out at $1,500 a year. So those are the two ways to do your home office. Now let's talk about the forms you have to use. So how can you write off more than just the $1,500 on your home office? It goes by the percent of the house that you're using. So let's say, for example, you're using anywhere from 10 to 25% of your home as a home office. But then you can just use the common areas of your home. You can delete anything that's to do with like a foyer, staircases. You can just use the map of your house, deduct those parts of your house, and only start using the common areas as a percent. And then you can deduct pretty much everything. You can deduct your interest, you can deduct your mortgage, you can deduct property taxes, you can deduct janitorial services, every single part that goes into that home, the internet services, the phone, anything that belongs to an expense that's used in some ways as a home office can be used as a percentage. And this is a massive, much bigger saving than just using the square footage. So how do you get to use this percentage as a massive discount? There's two ways. First is on Form 8829. That's on a just standard 1040. The other way to do so is on an accountable plan, which is a plan that your business makes with you as an employee if you are an S corporation or a C corporation. 1120S is an S, 1120 if you're a C corp. It will reimburse you as an employee for all of those expenses. So those are the two ways to take and maximize your home office deduction. One of the biggest deductions you can have is actually your children. It's close to $13,000 a year that you can deduct if they work in your business and perform a legitimate function. It can be as much as $100,000 before they turn 18, as long as there's a legitimate business use. You can use them for janitorial work, cleaning up your office, whether it's shredding papers or helping you with marketing or helping you make a website. All of these things you can do to pay your kids. That's one of the biggest deductions you'll ever have in your business. Let's talk about a real fun one, business trips. Did you know you can deduct your business trip? And not only can you deduct that, but if you time it correctly and you do it around the weekend, you can actually prolong that trip, and the whole thing is a tax write-off. So if you want to go to the Bahamas, Florida, someplace warm when it's cold, we all know how it feels, but if you're already in a warm climate, maybe like Alaska, I don't know, but whatever it is, you can deduct your hotel, your meals, anything that has to do with your trip, your flight, but you can't deduct entertainment. That is off the table in 2023. Don't even try it. By the way, if you like this video, make sure you smash the like button and share it. Make sure you subscribe, because each time you do it, you help my marriage. Now, more importantly, it helps the algorithm, and that's going to push us out to more and more business owners, which is going to help them. Now let's talk about Section 179 bonus depreciation. Now, 179 and bonus depreciation, they're different things, but they work almost the same way. It just depends on how they're being used. What it allows you to do is deduct every bit of what the expense is up to certain limits and certain thresholds. So for example, let's say you make $100,000, but you buy equipment for your business. Well, that equipment can be used either as bonus depreciation or Section 179. In this case, what if you finance the equipment that you're using And guess what you can do? If that equipment is more than $100,000, you can use either Section 179 or bonus depreciation and wipe out 100% of your income, where you get to keep all of the profit because you financed the equipment. Now, if you don't want to finance the equipment, it still comes off the top end of what your income is. So let's say, for example, you've made $500,000. I know that's a lot of money, not everyone, right? Let's say you make $500,000 and you buy $500,000 of equipment. You decide to use all cash because you're Mr. Moneybags. You can actually keep and write off every single dollar and you won't pay 1 cent in taxes. This is how powerful this is. Now let's talk about qualified retirement plans, or HSAs or HRAs. Both of these allow you to contribute to either a retirement in the case of a 401k or an IRA, and you don't pay a penny in income tax because you're deferring your taxes. Or you can use an HSA or an HRA, which is used for medical. Now, the HSA and HRA is not widely known. 401ks and IRAs, everyone's heard of. When we focus on the HSA, it's the only plan that I'm aware of in which you can use pre-tax dollars, put it in, take the money out when you need it for taxes, and never pay a cent either in or out, either on income tax or self-employment tax. Now, with a 401k, you will pay self-employment tax, but you won't have to pay income tax. If you use a self-directed 401k or an IRA, you can actually use it in really powerful ways to contribute and grow your wealth building. You don't have to do a solo 401k or a self-directed IRA or a 401k. You can just use a standard one and invest in the stock market. It's just another choice that people just don't know that even exists. The next big thing is not a deduction, it's just basically how to use an entity. So if you use like an LLC or an S Corp, you have self-employment tax. And if you use an S Corp, you can actually reduce your self-employment tax by a whole bunch. So let's say in this example that we have $100,000 in income, right? If we have to pay that directly as a sole proprietor or as an LLC that's not being taxed, as an S Corp, you have to pay $15,300 in self-employment tax. That's a big enchilada. Instead, what you're better off doing is putting $50,000 in salary and $50,000 that's a distribution. This way you can save $7,650 in just doing that alone. It's super simple to do. And also, it's really important that you can even save even more money than that depending on the type of industry and business that you're in. One final thing is how to think through deductions, because some people don't want to pay any tax at all, so they go crazy buying stuff. But I want you to think through this. What if, in this case of buying equipment, it costs you $1,000? Now, is there a write-off to this? Yep, you can write off $1,000 of the income for your business. That's 100% true. But in this case, we might have to spend $1 to save 35 cents. That's how much money you're trying to save in tax, 35, 40 cents, depending on where you're living. Now, if your business needs the equipment, absolutely buy it, deduct it. It's a great way to save. But in most cases, you can be a little bit more creative and use a qualified plan or an HSA and save the most amount of money and not pay tax on any of that without you needing to buy equipment that you don't need. So be careful just buying equipment to lower taxes. I know people that do that and they just don't realize there's better ways to save money on taxes and not buying equipment that they don't need. Obviously, you should get the help of a professional, and that's what we do. So we have a little link down there. Click on that, and we'll get you the help that you need, maximizing all your deductions, saving you the most amount of money in taxes. And me and our team will do the best we possibly can to get your taxes to the lowest amount possible. So just click on that link down below. You'll see where it is in the description. We're excited to work with people like you. But in the meantime, like this video and please subscribe. We are going to give you so many great tips. We are a new channel, we're growing, and so every single time you like, you comment, you subscribe, it helps us, and that gives us a bigger opportunity to help you. As I mentioned before, helps the marriage. And if you thought this was good, this video right here will go through the ultimate plan that you need for your taxes.